Hello everyone, welcome again to another session where we're going to review the question Spaniel, which is a June 2013 exam paper. So this question was asked June 2013. So first of all, we have to go to the question requirement to see what exactly is required from us to answer the question. So here we're told discuss why the auditor should presume that there are risks of fraud in revenue recognition and why ISA 240 requires specific audit responses in relation to the risks identified. So in the situation here, we have the exam verb that we should pay attention to discuss. And it's a 7-mark question. So it should not take you more than 10 minutes to answer it. So yeah, um, in the situation we have, um, like the question itself specifically says, according to ISA 240, which is the auditor's responsibilities relating to fraud in an audit of financial statements. So when identifying and assessing the risk of material misstatement due to fraud, the auditor shall, based on a presumption that there are risks of fraud in revenue recognition, evaluate which types of revenue transactions or transactions give rise to risk. So this is a statement from this ISA 240, which we've said is the auditor's responsibility relating to fraud in an audit of financial statement. So what we understand by fraud is it's misrepresentation of facts or statements. So that is fraud. Fraud can be you whereby you misrepresent certain information and pose it as true while it's not true. So that's what fraud means in a nutshell. So in coming back to this question, as we see, we've been told discuss. So this means that this question means you can give out reasons why auditors should presume their risks in revenue recognition, and you can also provide reasons as to why it doesn't have to be necessarily high risk. So in discuss, it means that you have to give an argument for and against the statement that is being asked. So in this situation here, you can give certain points in terms of presuming why the auditor should consider revenue recognition as a high risk area and why it should not be considered. So you can give, but you have to give compelling points for that. So if we go specifically in this question requires us to consider ways in which management can achieve fraud in revenue recognition. So you should give all those reasons as to why as to why the auditor may be able to make fraudulent activities surrounding revenue. So the first instance that we can give from this question, we can say that in certain companies, uh, managers can be expected to hit certain performance targets depending on the revenue targets, because certain levels will require you, maybe if you reach maybe certain revenue target, you get a bonus or commission of certain amount for that revenue target. So it means that they are incentivized to actually perform better to get more revenues. So in that situation, it can happen that the manager might be tempted to actually make fictitious reports in terms of the revenue. So that is a reason why you can consider it as a high risk area. So in that situation, the auditor will have to be very, very skeptical on revenue recognition so that they can be able to apply the necessary audit procedures in order to detect any form of risk of material misstatement caused by fraud. So the other point that we're going to note is on this question is that it will depend if the company is on a cash basis, especially let's say if it's in retail industry whereby maybe you have like transactions that are only cash based. So in this situation, it might it it causes a high risk for theft and even manipulation of revenues to conceal the crime. So it means that maybe they can even do even money laundering because of the cash-based business, that if it's highly cash intensive. So that's another reason that you can give as to why the revenue should be considered as a high-risk area for fraud. So in the other instance is whereby you can find maybe depending on the volume of transactions that the company does, So you find like maybe there's if there is a high level of transactions that happen every day in maybe if it's a supermarket, if it's yeah, sort of like any business that will have a lot of transactions in between, there's a risk of the auditor failing to detect fraud and error, so using the techniques that they will use. So that risk tends to increase if there's going to be a high volume of revenue transactions. So it might give the management an easier way to manipulate figures if it's a high volume based business that has so many transactions in a day. So in that, it might increase that risk of failing to detect fraud and error using the sample-based auditing techniques that we know of. And in another situation, we can say that revenue is can also be considered a judgmental area because you can it for instance, if you are dealing in professional services, it's whereby maybe you give clients maybe a certain percentage of whereby you make estimation of percentage of completion. So of like scope of work, this has been completed by 20% or 80%. So those kinds of figures, it can be maybe um, it causes like estimate. You give estimates of work done. Maybe for example, if you're in construction, especially if you're in construction business, whereby you talk about maybe 20% of work is done, 40%. So if you're dealing with estimates when it comes to you providing services of any nature, maybe professional services, or you're doing construction work. So in that situation whereby you have to estimate revenue figures, it might cause also a point whereby management can also manipulate those figures and uh, increasing chances of fraud to happen. And so, as I said, there's a part whereby you can talk about why it shouldn't be considered as a high risk area because you've been told to discuss. So it means that you can also like put another argument against the notion that it should be considered that as a high risk area. So in the situation, what you can say is um, in just a summary, you can just say that it will depend. It's not always the case that the revenue will have to be considered as a high risk area because the companies who actually have like simple revenue streams. So if they have low volume transactions, then there'll be low risk of let's say low risk of fraud. So you can argue it in that way, and also you have to mention like maybe you can give an example you can give an example for maybe in cases where there are no high risk areas for fraud in terms of revenue. So you can say maybe for example if you're in leasing of properties, you can say that if there's a company that does leasing for properties for fixed annual amounts over a fixed period of time, in the situation, the revenue is already known because it's over a fixed amount and it's over a fixed period. So in that situation, it means that there can be low risk area for it can be a low risk area for fraud. So in the situation, that's what you can put out as your answers. So in this, as we have noted down these answers, you have to realize that you have to give out like certain examples of areas whereby you can consider revenue being high risk and consider areas where they are low risk. So as we've said, like in high risk areas where revenue is considered as can be considered high risk area is whereby if you're dealing with a cash based business, whereby you're dealing with high volume of transactions, and also in situations whereby if you're dealing with estimates in terms of revenue, like if you're dealing with long-term contracts such as construction of buildings and provision of services, those can they can be your examples for high risk areas for revenue in terms of fraud. And then you can give a simple example of why it doesn't have to be necessarily considered as a high risk area. That's what I was talking about. If you're joining a company that has like leasing of properties, so it means that there's a fixed income over a fixed period of time, so the money is known, and so the perpetual money will be there. So those are what you can put down for your part A Spaniel. So let me let you digest that, then we'll come back for part B.